Welcome to the session by Teji Mandi on why it's a great time to invest, and why this budget has unleashed a growth upcycle for the Indian economy, which will also be great for the stock market. So I've prepared a presentation, and I am just going to run you guys through it. So I'll have a quick presentation that I'll share with you guys, and then we can take questions post that. So, let me just kind of set some context in terms of, how or why we're calling this a super cycle. So, if we look at this year's budget, I mean, it's a clear orbital shift in the thinking of the government. Never before has the government had a deficit target of 9.5%. And this was significant as this was the first budget after the pandemic. And, it's, great on the government side that they took such an aggressive stance to focus on growth. Because with a clear deficit target of 9.5%, we've broken out from the shackles of the IMF and the rating agencies, and this could kind of put India in the same growth trajectory that China went into 20 years ago, and it could be bigger than the 1991 reforms that we've had in India, and probably it's probably even bigger than that. And compared to 91, India's macro position is actually much better. And the reason for that is this. Now, India has one of the lowest debt to GDP compared to any of the other large countries in the world. We have forex reserves of close to $600 billion. In 91, we had to borrow $1.5 billion from the IMF to get out of kind of save ourselves from bankruptcy. So compared to that, we are obviously in a far better position. And also over the last 5-6 years through RERA, GST, Jandhan, bankruptcy laws, etc., a lot of the groundwork for future reforms has been laid down. Now, if we are to look at the government's policy during the pandemic, the government has acted very maturely through the pandemic. They followed something called the barbell strategy. What that means is that they were essentially protecting the downside. So till June, globally, there was so much chaos. No one really knew, what's the complexity of the disease. And in India, especially where it's such a logistical nightmare to roll out medical infrastructure, it only made sense for the government to shut most things down and build the necessary medical infrastructure and also study the complexity of the disease. So because of this, India's cases kind of peaked out in September, and then they've fallen substantially after that. Globally, India is considered to be a role model in handling the pandemic. Now, if you see the government's policy, they essentially went bottom up. So they helped the neediest of the needy in the times required. So, through food grains, direct cash transfers, etc. A lot of the MSMEs and farmers were given priority sector loans to help them in their working capital and to kind of help them in their cash flow. Also, during the pandemic, since cash flows were hit for several borrowers, banks. And even for the banks, this could kind of have had a domino effect on the NPA side. So that's why the government kind of gave a moratorium, and that moratorium essentially helped to soften the effect of the pandemic. Also, the RBI supported the economy with unprecedented monetary policy. The banking system was sitting on a surplus liquidity of almost 8 lakh crores. I mean, that's never been seen before. And because of that, at least the country didn't have a shortage of funds. Also, the government started rolling out various fiscal stimulus programs only post-September when things started opening up. Now, coming to the budget, so this was kind of clearly India's, big kind of like a big moment in India's history, because the government focused on roads, infrastructure, railways to kickstart the capex cycle. We also have a lot of PLI schemes that the government is taking in, so to make India competitive in manufacturing and in sectors like electronics and textiles. Also, this time the food subsidy bill was included in the budget, so this made the accounting a lot more transparent and clear. In the previous budgets, the government always talked about disinvestment. This time there was a change of rhetoric to privatization. Post the budget, a lot of people, several members of the government, including Nirmala Sitharaman and Prime Minister Modi, have talked about the fact that the private sector gets efficiency to business, in ways that the government simply cannot. They've also removed several duty structures. They've created a bad bank. So this will again help in augmenting sectors where either there was too much confusion around the duty structures, or where there were like too many NPAs. Furthermore, there's been a focus on sanitation and clean drinking water. Now, this is important in the context because in India, a lot of the diseases are actually waterborne diseases. And because of that, that affects the health of the citizens of India. So, with a focus on sanitation, clearly the government has put a focus on these things as well. And also there's been a gradual removal of the kerosene subsidy. Now, this is important because more and more Indians are consuming gas-based fuel. So this will also further help in improving India's position from a financial standpoint. Now, in the backdrop of all of this, we think that we are at the cusp of a long growth cycle. There are several reasons for this. One is India's corporate profits to GDP are at the lowest in several decades. In fact, because of bad loans, earnings of several banks have dried up. Once the NPA cycle reverses, earnings of banks like State Bank can go up like 10x. There has been a clear focus on capex, infrastructure, and roads. And this could actually have a multiplier effect in the economy that could re-rate sectors that have underperformed in the last 10 years. It's very significant to state that we're starting a cycle at low interest rates, low debt levels, and surplus liquidity. And this is important because the last 7-8 years for India have been about kind of corporate deleveraging. Now, as we go forward and the capex cycle starts, it's important that companies have low debt levels to start with, because that increases their capacity to take on debt to fund their future growth. Also, the December quarter has been a first quarter in almost a decade where earnings upgrades have been higher than earnings downgrades. So clearly, I mean, this marks the start of an earnings upcycle. Also, because of the pandemic and also over the policies of the government over the last 3-4 years, corporate governance in India has improved significantly. And the last thing is, India's P might look slightly elevated because we're sitting on almost 3 quarters of deflated earnings, but we have a long growth cycle ahead of us. So that's why PE may not be the best barometer to judge the country's economy. We should look at like earnings and valuations from a more long-term perspective and on a more stock-specific basis. So, net, what I'm trying to tell you about the budget is that it's very important to realize that, we are sitting on a great macroeconomic backdrop. We have, a great budget which was unleashed by the government that shows the strong intent of the government. And at the same time, we have the start of an earnings upcycle in corporate India. So the combination of all of these three is very deadly. In fact, it is ingredients like these that lead to the formation of a long-term bull cycle. Even from 2003 to 2007, when we had seen a secular bull cycle in India, the backdrop was a little similar. So in that context, it's very important to realize that this is a rare time. You guys should definitely consider investing in the market, because it is times like these that help you create long-term wealth. Now, a very important thing in the market is that time in the market is more important than trying to time the market. And that is because, for example, if you take Nifty data over the last 30 years, the Nifty has given returns of about 12% every year on average, which makes that to be about 30x. Now, if you try to time the market and you missed 30 of the best days of the Nifty, your returns would have dropped from 30x to 3x, right? And it's important to realize that it's very difficult to predict what the best days of the market are going to be. So that's why it's very important to remain invested, because that's how the big money in the market is made. Now, that was a little bit about the budget and why we think that it's a great time to remain invested in Indian equities. Again, I'd like to reiterate that, you'll not find too many times in your career when you're sitting on a time in a backdrop such as this. Now, to talk to you a little bit about Teji Mandi and what is it that we do. So Teji Mandi is a subsidiary of Motilal Oswal Financial Services. It's a SEBI-registered investment advisory firm. We essentially simplify stock market investing for retail investors. Now, how do we do this? We essentially, based on your risk profile, we offer you an all-weather portfolio. So we tell you what stocks to buy, and when to sell. We also support some of the top discount and full-service brokers in India. So you can transact in a very simple one-click way through each of these brokers. Now, if we look at the investment philosophy and the stock analysis process at Teji Mandi, we have 4 important aspects to it. One is that we track data across 30 different sectors and subsectors. We do detailed balance sheet, income statement, cash flow, and con call analysis. We have quantitative screeners that we run across accounting, growth, valuation, and return ratio parameters. We also, in a real-time basis, track news of companies, earnings, and other market participants. So if we look at the Teji Mandi philosophy, it's essentially a combination of focused stock picking and disciplined rebalancing. In focused stock picking, we look at bets from, we have 2 aspects to it. One is the tactical bets, which are companies which are relevant from a 3 to 6 month perspective. And then we have the long-term winners, which are companies that are relevant from a 12 to 18 month perspective. So if we look at tactical bets, there are 3-4 kind of major criteria. One is kind of industry consolidation. So, an incumbent may have a competitive advantage because of sector consolidation. So, for example, in banking, a lot of the large private sector banks have gained significant market share and will continue to do so on account of conservative underwriting, aggressive provisioning, and strong liability franchise. Government policy now, as we saw, the government kind of wanted to create an opportunity for Indian companies to be competitive. So that's why, for example, ban on electronic goods from China would benefit Indian electronics companies. Some examples are Amber Enterprises, Dixon Technologies. Now, if we look at industry tailwinds, there are certain external conditions which could lead to supernormal profit growth. So, for instance, because of the above average rainfall last year, the Rabi crop was strong this year. And because of that, good crop production has led to demand for tractors, fertilizer, and agrochem companies. And to give you an example of a tactical bet, we have a company in our portfolio called Ashok Leyland. Now, this is one of the largest CV players in India. So if you look at the CV cycle, it's coming out of a trough. Now, 3 years of degrowth due to axle load norms and BS6 combined with COVID has pushed the industry volumes to an all-time low, right? In the last few years, Ashok Leyland has had a much leaner balance sheet. This is because it has worked on modularizing its platform, which has resulted in leaner inventory and lower working capital cycle. The company has also strategically added products in the LCV and MHCV range, because of which its addressable market has increased. We entered the stock at about 70. It's currently at about 129, which gives us a gain of almost 84%. On long-term winners, we have 3-4 criteria. One is we look at companies with a proven track record of 1, 3, and 5 years. Just to mention, the time horizon for tactical bets is 3 to 6 months, and for long-term winners, it's 12 to 18 months. And so we also look at kind of meaningful growth triggers ahead for companies. In most cases, companies must display ROEs upwards of 15%. And in certain cases, some stocks might be beaten out of shape, because of which the risk reward in such companies may be very interesting. So an example of long-term winner is HDFC Limited. Now, I think it is without a doubt one of India's greatest NBFCs. It has probably one of the cleanest and best kind of mortgage books in India. And it also has subsidiaries like HDFC Bank and HDFC Life, which are leaders in their respective areas. Also, because of HDFC Limited's pristine asset quality and size, it has the lowest cost of funding. which gives it an advantage over most of the other players. There's also a huge runway for growth. Now, mortgage penetration in India is less than 10% of GDP. Cost of housing, if you include like the low interest rates now, the government subsidies, and the tax deduction on interest and principal. So in affordable housing segments, it goes to as low as 2.5%. Now, this is the lowest that it has ever been in 40 years. And, India has a young population. So this gives companies like HDFC Limited a long runway for growth. Now, if we look at disciplined rebalancing, now just like buying, even selling is equally important. And this is kind of our selling strategy. So, when the investment thesis is no longer valid due to the entry of a large competitor in the sector, or the company's capital allocation policy may have changed, or there's a management change, our investment thesis may change, which is why we may consider exiting the stock. In some cases, there might be companies or sectors that have better growth prospects, or there are companies with better capital allocation policies. In those cases, we may choose to replace the stock with the other company. And also in cases where our initial hypothesis with which we bought the stock changes, we may consider exiting the stock. So if you see the performance of our flagship portfolio, that's it's done meaningfully better than the underlying index. So we take the Nifty 500 as our index because we have a multi-cap portfolio that goes across large, mid, and small caps. And as you can see, we've outperformed on almost every time period that you can think of. And yeah, how much do we charge? So we charge, we have 3 plans. So depending on which plan you take, it goes to as low as 149 per month if you choose a 6-month plan. And if you do choose to take a 1-month plan, then it's at 249 rupees. So the good part about this is it's a flat fee model. It doesn't matter how much you invest, whether you invest 20,000 with us or you invest 20 crores with us, we charge you the same amount. And that's why, it's in your interest to invest as much as you can through us. Now, what do you get when you pay for Teji Mandi? So one is you get, an advisory portfolio of 15 to 20 stocks. We also send you regular rebalances that, which is when to buy new stocks, when to sell existing stocks. We also provide regular portfolio updates on those stocks. We also tell you the rationale behind every move of ours. So why we bought a stock or why we sold a stock. And we also have, the transaction mechanism is really simple. We provide a simple one-click buy, sell, and rebalance facility. And because of this, the entire experience on the app is very streamlined. So, that's a little bit from me, guys. I would again urge you to consider that we are at a really, really good inflection point in Indian equities. It's a very rare time in your life when you can invest. So for people who haven't invested, I would strongly urge you to start investing. And for people who are already invested, please remain invested. Maybe please put more amounts of money if you can. And do consider investing through us because, we've made like really high quality advisory to you really accessible. We're providing it at really, at 149 per month. It's really accessible. And our minimum ticket size is 20,000 rupees. So, it's at a place where I think most of you can definitely invest. So I would urge you to do so. I'm happy to take any questions from here. Thank you.
Hi, Vaibhav. Thank you so much for that awesome session. So we did receive few questions. So we have Amol Gupta who's asking, please teach us some intraday strategies.
So Anmol, unfortunately, we don't do intraday trading. We are, more of a long-term kind of investor. So we mix tactical bets with long-term investing. So I think maybe that might not be so relevant.
Right. And we have anonymous attendee who is asking which stock can perform well into 2021.
So I think you should, I've given you 2 examples of stocks from our portfolio, which you can look at. So you could consider investing in them, but I would urge you to buy the portfolio because that's where you'll really see the essence of what we're doing.
Right. So we have Rajashekar who's asking that you have discussed about Ashok Leyland and HDFC. Can we still buy these companies at the current price?
Yes, you absolutely can. These are in fact stocks from our portfolio. We would recommend you to have it, but I would not, recommend you to buy these in isolation. I would recommend you to buy the entire portfolio because while these stocks are obviously great on their own, it's important to have a portfolio because stocks kind of tend to balance each other out, and so that's why it's important to have some level of diversification as well. Ashok Leyland and HDFC were more from the point of view of
Right.
an illustration.
Right. So we have one more question, which is from Puric Off, which says, why penny stocks are risky?
Sorry, I think there was another question. I think, sorry, what is the question again? Sorry, can you please repeat it?
Why penny stocks are risky? Or is it risky?
So penny stocks are risky because, it's, I think a lot of people get fascinated with penny stocks because they're really cheap and they're really, it's fascinating to see because it's very speculative in nature, but you cannot make long-term wealth through penny stocks. That's important for you to realize. And that's why it's very speculative and only in very, very specific cases where you're really insightful about a company and you've spent like 2, 3, 4 months understanding that one company, only then maybe, and if you have a certain level of confidence, then you should invest. But otherwise, it's very risky to invest in them because they're just, the price of that is governed by factors which may not be in your control.
Right. So Rajashekar has one more question regarding our app. So he's like, can we subscribe in Teji Mandi app and do our own investment and selling decision?
So Rajashekar, we will give you a recommendation of what to buy and what to sell. Now, whether you want to execute that advice or not is completely up to you. So it's like a non-discretionary kind of a thing. So you are in the control of your destiny. We are your kind of professional help or guidance along the way. And you can choose whether you would like to execute our advice or not.
Right. We have Pankaj Malviya, who's asking, if my broker is not associated with Teji Mandi, then how can I use it?
So Pankaj, yes, very relevant question. So what we do is you enter the amount that you want to invest. We also give you the model portfolio and we tell you how many stocks you should buy. And whenever there's a rebalance update, we also tell you how many you should sell. So you would have to execute that advice on your own through your broker, since that broker is not linked with us. However, if you do choose to, open, an account with any of our partner brokers, I think your execution will be streamlined.
Right. We have Rajat Jain who's asking, hi, how would Teji Mandi help in getting a new investor enter in the market who has no clue about the market?
So very relevant question. Again, thank you for asking this. We've built the product very specifically for people such as yourself, where, we don't want you to spend time trying to understand a trading screen or trying to learn stock fundamentals. What we simply want you to do is that, we want to guide you through the stock market. So all that you have to do is you have to subscribe to one of our plans. You have to have a demat account with any of the partner brokers like Zerodha or 5paisa or any broker who you are comfortable with. And then, it's a simple kind of one-click execution. And along the way, we also tell you why we're doing what we're doing. So you also, get educated about how to be a better investor. So it's a great way for you to actually get started in the stock market because you actually have professional help. Because typically investing in the stock market is very risky. I mean, it's like an open heart surgery, and if you go on your own, yes, you can be casual about it. But if you want to make some serious long-term money, then you should probably get professional help like Teji Mandi on your side.
Right. We have a question from Hardik, who's asking, with the subscription of plan, we can get only suggestions and reports. What about our learning?
So Hardik, yes, we not only tell you what to buy, but we also tell you why you should buy, why you should sell, and why you should buy another stock. And we also have, we have something called 3 things to know, where we tell you about 3 important events during the day. We also cover one specific sector or one specific theme on a daily basis. So there's a lot of education material that is available at our end. And so we would urge you to go through all those materials because if you do that over a period of time, you'll realize that you're becoming a much better and more informed investor.
Right. And now we have a question from Tribhuvan, who's asking how are the shares sold by the portfolio? He wants to know about the rebalancing, basically.
Yeah, so rebalancing, as I'd explained in that slide, now a lot of times, the world is a dynamic place. So a lot of times there could be factors because of which the investment thesis about a specific stock might change. It could also be the case that there is another stock that is significantly better than what we're holding. It could also be the case that we are at an extreme point, like how we were during the pandemic or when the market is overheated. So in those cases, we might consider staying, holding a percentage of the portfolio in cash or in liquid ETFs.
Right. So Deepak Agrawal is asking us, sir, market valuations are all-time high. Should we wait for correction or continue in investing?
So Deepak, thank you for that question. I think markets have obviously run up, but as I'd explained, the valuations right now are only illusory because we are sitting on 3 quarters of deflated earnings and we're sitting on a protracted growth cycle going ahead. And it's very important to realize that is so it's important that you remain invested, and in fact you should invest more money because the kind of money that you might be able to make in the next 5 to 7 years, it's probably unprecedented. So I think you should consider remaining invested.
Right. We have Abhishek who's asking, hi, if someone is interested only in a long-term portfolio, do you indicate which stock recommendations are for long-term and which are for 3 to 6 months?
So we unfortunately, this is more of an internal guidance. It's not something that we share externally. And the reason for that is that, things are very dynamic. So something that we bought for 3-6 months might become relevant even for 12 to 18 months. And something that we bought for 12 to 18 months might become relevant for 3 to 6 months. So, it's a dynamic thing. And that's why we don't want to cause, this is more of the fund management team's kind of internal guidance. And so that's why we don't share that externally.
Right. So we have Saurav Das who's asking us how much CAGR can be expected if invested for 10 to 15 years in Teji Mandi?
So thank you for that question. It's definitely very relevant, but it's very difficult to really predict the future and say what returns you will get. But see, the market, as I've explained, Nifty has given you about 12% over the last 30 years. We expect that, again, this is an expectation, and I like to give a disclaimer that, this is not something that we are promising or that we can guarantee, but on a steady state basis, we expect that 15 to 20% is what you should maybe expect on a realistic basis.
Right. So we have one more from Shrikant Sarda, who's asking 20,000 per month or annually for investment.
No, so 20,000 is annual. That's your investment amount. What is a per month amount is the subscription amount. So if you take the 6-month plan, it's at 149. If you take the 3-month plan, then that's at 199. And if you take the 1-month plan, that's at 249 per month. So you can start with as low as 20,000 rupees.
Cool. So we have Kuwait Sansardhan who's asking, would you suggest in buying in lump sum at this time?
Yes, you should buy in lump sum. You absolutely should. You should definitely remain invested in. You should definitely consider investing as much as you can because that's how you create long-term wealth.
Right, exactly. So we have Darshini who's asking, how often will Teji Mandi tell us about the rebalance updates? So she's basically asking how often will Teji Mandi give rebalance updates in a month?
So see, there's no stated policy because again, as I've explained, things are very dynamic and fast moving. But on average, what we've seen is over the past, probably once or twice in a month is when we push a rebalance. So maybe that's something that you can expect. But again, that is just kind of a, how do I say it? It's just something maybe that we've done, but it's not like fixed.
Right. So we have Sachin here who's asking us, can you give suggestions with different risk-taking capacity?
Yeah, so we recommend the stocks based on your risk profile. So, that's why if you're a conservative investor, we recommend a certain set of stocks. If you're moderate to aggressive, we recommend some other set of stocks. So that's why it's important for us. And we're also SEBI registered investment advisor. So we of course have to take your risk profile before we make any recommendations.
Right, right. So we have a very interesting question from Visual Punch Pandey. He is asking, if I took 1 month plan for a long-term investment, then I don't need to pay you for 12 to 18 months, right? When the time comes, that is after 12 to 18 months, I will subscribe monthly plan to get upcoming updates. Is it okay for me to miss the rebalancing updates during 12 to 18 months? Will it work this way?
No, so I would strongly recommend against that. And that is because, again, 12 to 18 months is only for certain stocks and that's a certain outlook. But again, things are very dynamic. We do constantly prune the portfolio from time to time. And as I explained, like just as buying is important, even selling is equally important. So that's why you guys should like remain invested with us. You know, the price points at which we're offering this service is really low. And that's why you guys should not even think twice before you invest with us because, you might try to save money by not subscribing to us, but that could actually be very costly for you in the long term. Right. So I think you should not miss the wood for the trees. So that's why, like, please, if you are investing with us, please continue to do so on a continuous basis. Yeah.
Cool. So we have Ajay Kumar who's asking, will any company buying into crypto have an impact on their stocks?
Sorry, can you please repeat that?
Yeah. Will any company buying into crypto have an impact on their stocks? Is what he's asking.
Buying into ditto?
Cryptocurrency. Crypto.
I mean, I don't think that's really relevant for India. I mean, I think investing in crypto has got nothing to do with the earnings of a company. I mean, unless specifically companies take their cash and invest them in cryptocurrency, but I don't see that in the foreseeable future because the government is making it illegal to invest in cryptocurrencies. And it's very unlikely that Indian corporates would invest their hard-earned cash in a speculative currency like crypto.
Right. Right. So now we have Saurabh Prakash who's asking, given that the tactical bets are of 3 to 6 months, what is the expected turnover I can expect? Given that I also want to minimize tax, especially STCG. Yeah. So that is what he's asking.
So good question. See, I think the 3 to 6 months might, because they're tactical in nature, sometimes it may take, they may play out in the shorter term or they may take longer to play out. So depending on that, but I think on average, maybe you should expect the portfolio to churn at least about maybe once a year, once to 1.5 times in a year, because some stocks might be, some stocks will obviously be there for the long term, but the tactical bets obviously kind of keep changing. So that's where you'll see the maximum action. But again, I think from a tax point of view, it's not something that you should really worry about. What you should kind of really care about is making money in the market and also protecting your capital. So the selling is done only so that you can make the returns and move on to better stocks as well. So I think you should not worry so much about the taxation point of view.
Right. So we have Devesh here who's asking, do we need to open a broking account also, or can we just subscribe for the advisory calls?
So for just purely for the advice, yes, you can subscribe and you get the advice. You'll get the model portfolio also based on your risk profile. But at the same time, if you want to execute that advice in a seamless way, then you would have to open a demat account with one of our partner brokers.
Right. Thank you for that. And now we have Amardeep Singh, who's asking, do you check technicals at your end while holding an existing long-term bet?
So yes, we are obviously constantly checking the the performance and also the volumes of a stock. I mean, just to understand how the market is looking at the stock, or what is the market's perception of the stock. And it from time to time, it may give us some reality check. But again, we are more of a fundamental and research driven kind of a company. So technicals are just there more from a kind of maybe risk mitigation point of view.
Right. So now we have Rajat Jain, who's asking if the advice given to us is personalized or more general. So he's asking is the advice given to us going to be personalized or general?
So the advice is basically, I mean, we have a model portfolio for every risk category. So depending on your risk category, we have model portfolios that we've created. So those will be advised to you. We don't. I mean, we don't provide. I mean, yeah. So it depends on what risk bucket you fall into, and on the basis of that, we provide the advice to you.
Right. So we have Mayank Pawar who's asking, so please suggest any broker for students which will have small charges.
So I would suggest you should open it with Zerodha. I mean, since all our trades are delivery based, it's kind of free on Zerodha. So, that's how you should, yeah.
Cool. So I think Mayank, that's Zerodha for you. And we have Rekha who's asking, what kind of percentage gain can one expect in the medium term?
So I think as I've answered this before, I think, again, this is not in any way something that I'm promising. It is just an expectation that you can have. You should probably expect on a steady state basis about 15 to 20%.
Right.
But that's historically what the markets have given.
So we have one more question from anonymous attendee who's asking, if somebody is not so expert in buying and selling the shares, does Teji Mandi teach the way how the process works?
So, so basically we tell you what to buy, and when to sell. So as long as you're with our portfolio, we will explain to you all our moves individually. We don't give individual recommendations on your own portfolio. So as long as you've bought the Teji Mandi portfolio and you're executing through us, you will have all the information about when to buy and what to buy.
Right. So we have Mohammad Karimullah Ansari who's asking, what is the future of Trident stocks?
So I would, unfortunately, I cannot give recommendations on an individual stock because that is not what we can do. You can obviously look at the stocks in our portfolio and maybe look at some of them, but just to kind of give you a very quick view, I mean, Trident has done well this quarter. They're obviously in the textiles industry. Their home textiles division specifically is doing very well. So yes, they've done well, but I mean, whether you should buy it or whether you should hold it, I mean, that's not a recommendation that I can give you.
Right. So we have Tribhuvan again, who's asking any documents required to join Teji Mandi.
Yes, so we would require your PAN details, and I think that's kind of good enough for you to subscribe to our platform.
Right. We have Devesh who's asking that do you take regular webinars for your subscribers?
So yes, I mean this is our first webinar. So yes, going along, we will definitely have more webinars as we go along.
Right. So minimum time for rebalancing the portfolios also, which we have covered. So then, so that's also done. We have covered most of the repeated questions. So we have an interesting question from Harsh Vasi. So he's asking, I have 5 lakhs to invest in equity as of today. Do you suggest to invest all at the same time or in parts like 1 lakh, 2 lakh, 3 lakh, etc.?
So that's a personal choice. I mean, if you ask me personally, I mean, I am 100% invested in equities because that's the asset class I understand best. I would kind of probably put it all in one shot. But if you are someone who wants to kind of take your time and do it, then you can probably do it over a period of time, that you can start with maybe a lakh, and then as your conviction increases, you can probably consider investing more, and or you can also set up an SIP.
Okay, this is very general question. What is the price for the advisory? This is by Sairaj Londe.
So yeah, price for advisory, I think we've mentioned that. So for 1 month, if you take a pure 1 month plan, it's 249. If you take a 3 month plan, it's 199, and if you take a 6 month plan, it's 149 per month.
Right. Okay. So this was an interesting question regarding documents, which Shrikant Sarda is asking. It's just an advisory board kind of thing. So why is PAN card necessary?
So this is something that SEBI requires. This is because basically the PAN card for us becomes the verification document for the individual. So that's why we require the PAN. Without that, unfortunately, the regulator doesn't allow us to proceed forward.
Right. This Anu secondly, who's asking, is investing in index funds beneficial?
So investing in index funds is definitely beneficial. I mean, if you are scared of direct stocks, or you don't know how to invest in direct stocks, and you're not sure about which mutual fund to invest in, then yes, I mean, index funds are a great place to start. But again, you should realize that index funds are a passive strategy, in the sense that they follow an underlying index. If you're looking for, kind of direct stocks that you have in your portfolio, and, you make kind of returns which are, slightly higher than the index, then you might want to go with an active manager like Teji Mandi.
Right. We have one last question. So we have had many similar kind of questions, and I believe, Vaibhav, you have covered most of them. And so we'll just end it with our last question, which is by Devesh, who's asking, do we need to disclose our investment amount to you?
Yes, sir. So the reason we ask you for the investment amount is so that we can recommend the number of stocks to you. And I mean, you can go on your broker and invest more also if you want, but it's only in your interest, because since we are a fixed fee advisor, for us it doesn't matter whether you invest as much as you want. We are not incentivized by the amount you invest. So it's in your interest to tell us.
Right. So yeah, Vaibhav, that was it from the Q&A session.
I think there are a few more questions. We can take some more, I think.
Yeah, you can go ahead. Whichever, just going through it.
I think there is one by Saurabh Prakash on how is Teji Mandi better for me versus mutual funds, given that I have a small amount to invest currently and fees will be the same. So again, mutual funds, as we've seen, they've underperformed the market for a fairly long period of time. But again, there are some mutual funds which are good. But if you do have a small ticket size, I mean, you can invest with Teji Mandi with as low as 20,000 rupees. So you should get invested with Teji Mandi if you want access to direct stocks. If you don't want access to direct stocks, then maybe mutual funds might be the way to go for you. Okay. Yeah, I think that's probably it from our side. Everyone, thank you so much for attending this presentation. It was really, really nice to have all of you here. It was a lot of nice questions and a lot of interesting ideas. We will definitely hold more webinars in the near future. So please do come for them, and we will be in touch with you through email, WhatsApp, and through our app. Thank you.